And of course, this two-day pause, the worst performance in about a month, well overdue given how much relentless strength we've seen in this rally. If you take a look at the declining expectations from the Fed and perhaps a higher expectation maybe of being able to get that soft landing after all, does that suggest that we could start seeing a way down for the dollar?
Morning, and thanks for having me on the show. I think, yes, you could agree that, some of the drivers supporting dollar strength in the U.S. Are kind of scaling back. But this is an important week. You have the ECB, you have the BOJ. So both of those decisions are more likely to trigger further dollar strength. So it's hard to see, this bout of correction extend materially. To us, while we think the broad dollar is likely to peak out in this quarter, in the near term, we see some of these tail risks not fully priced into the dollar yet.
Where do you see the biggest pressure points when it comes to Asian EM?
So in Asia, in terms of incremental pressure, I would probably put the Indonesian rupiah up there. It's kind of lagged the move higher in dollar Asia and broad dollar strength, especially as it enjoyed tailwind from, on the trade side. And we've got a situation where BI is going to be hiking slower, and some of those trade-related tailwinds already starting to weaken. So we see the pressure being most intense or showing itself up most in the IDR. So we expect dollar IDR to head higher.
How much more pressure can we see in the Japanese yen as well, given that we're headed towards that BOJ policy decision as well?
So for us, we kind of think the BOJ is going to stay on hold. In their forecast revisions, they're probably going to revise growth lower, inflation higher. But at the same time, with little indicating wage pressures in Japan and BOJ staying on hold at least till September, it's quite likely that dollar yen will have another move higher in the near term before it eventually moves lower.
How much is the weakness that we're seeing in the yen about rate differentials, and how much is it about just what's happening with the trade relationship right now?
So you could look at it as a combination of both. Clearly, short rates are widening quite quickly, and the U.S. Rates outlook is intact. We expect the Fed to hike 75 basis points, followed up by another 50 and 225. Whereas in Japan, the energy bill and the fact that BOJ is going to be hiking or normalizing policy much later, and the pressure is going to manifest itself in the exchange rate.
Ashish, when it comes to the Aussie dollar, there's this kind of interesting cross-section of cross-currents, right? Because at the same time as you've got pretty strong terms of trade and commodities demand, there's this real risk-off aversion to the likes of the Aussie and the Kiwi, which is going to prove to be stronger.
So to us, between both, we see the Aussie dollar being stronger. It's not dependent on financing flows like the Kiwi dollar. The Aussie dollar is also likely to see some tailwind from China, looking at stabilizing growth in the second half of this year. We see some potential pickup in infrastructure spending. Of late, there have been reports that the ban on Australian coal will be lifted. So that could provide another boost. And the Aussie dollar has also been quite sensitive to equities and risk or EM risk sentiment. Some of those things are unlikely to match what we'd seen in the first half of this year. And if that's the case, you should see the Aussie dollar start to kind of gain in line with what, the commodities terms of trade would have implied, or what, its growth and external sector dynamics would have implied.
Ashish, what is the Chinese yuan sensitive to these days? I mean, we have seen the outbreaks and the rolling COVID lockdowns not really affected that much this time around.
Yeah, so I think if you look at the Chinese yuan, the big drivers there, basically the external sector. The external sector is running very strong, and it's to a large extent the PBOC that kind of guides it, to an equilibrium level. Only briefly during the Feb to May-June period, you had seen bunched up portfolio outflows that allowed for this correction. The natural pressure is, dollar China lower, But if you're looking at a scenario where euro could be a few big figures below parity and dollar yen could be above 140, it would be natural to expect the pressure on dollar China to pick up again and it to head higher towards the 680, 690 level.